Hello, everyone. This is Philip Morris, lead analyst for Bombee Financial. As you all know, we have started our YouTube channel, and this will be one of the first installations of that. To be fair, this will be one of the boringest videos that I explain, but I believe this is needed to kind of give those context about the stock market, about financials, about equity, give them some more understanding as to why we're doing what we're doing. And on top of that, just kind of lay the groundwork as to where we plan on going with this YouTube channel. Um, to us, financial literacy is everything. And with how our school system seems to place priorities on testing and trying to make individuals be more of workers and entrepreneurs and leaders, to say, we wanted to give other people different resources to understand that continuing the rat race that we're currently on isn't the only way to go about things. So for example, let me start off like this. Who we are. We're a group of like-minded individuals. Me, for myself, I do own a MBA. Some of us within the group are active homeowners like myself. We do invest in equities. I have a 10 plus year career in finance. My associate has 6+ years in human resources. We have started and launched successful businesses. We're learners, and we are all in education. And what I mean by education, it doesn't only stop in college. Education is learning every single day. I'm not here to say I'm the smartest or brightest when it comes to stocks and finance and personal finance and real estate. That's not my goal. My goal is to share what I learned, what I know, in a very simple manner. The biggest reason that we don't succeed in things that include numbers like finances and things of that sort is because we're conditioned to run away from finances. I myself, I'm African American, and when I joined a lot of these, or when I picked finances, of course, I realistically remember being one of few, very few, in these classes, whether it was accounting, finance, economics. It's not something that we are pushed towards on a daily basis. And I can't say it's our fault. I don't think we know the money that goes into these things, right? My goal is to be able to teach an individual, or to teach a young child, hey, I understand you want to be the next LeBron James, be the next Stephen Curry, but the odds of that happening are slim to none, right? Should it happen, or if it does happen, that's cool, but I can teach you how to be more like Warren Buffett. I can teach you how to be more like Jay-Z. Jay-Z being one of my many inspirations, seeing how he was able to transform his life around and be a business mogul in anything that he touches, right? Yeah, we know him from music, but he's also an avid investor. Nas as well, being an investor in Coinbase, being an early investor, Shaq being an early investor in Ring. These are little things, or I'm not even gonna say little, these are things that we don't think to share our kids about or tell our kids about, because it's just, we don't have ownership ourselves. So yeah, it's cool that LeBron James might be worth $1 billion today. But because he technically, when he worked for the Cavaliers, Dan Gilbert, the owner of the Cavaliers, is making billions every single year. So it's just retraining our minds to think different than what we currently know. And I want y'all to meditate on this. All of the top achievers I know are lifelong learners, looking for new skills, insights, and ideas. If they're not learning, they're not growing, and they're not moving towards excellence. Again, I'm not here to tell you I'm the smartest guy in here. I'm just here to regurgitate and teach what I have learned from others in a language that's easily digestible for y'all. Here's our mission statement. is for us to translate. The biggest issue we find when it comes to personal finance are terms, numbers, and application. The minute many think to themselves, I don't understand, their minds close immediately, off the rip. And what I want to be able to do with this channel is to be able to expand your mindset, to be able to expand your brain, for it to be broken down in such a way to where you could teach family members, you could teach friends, hey, here's what I learned. Here's how it applies to the things that was going on today. We want to simplify. Finance is easy. Don't let anyone tell you otherwise. As you learn and you digest, it becomes the muscle memory. The reason I say it's easy is because our first instinct is to think numbers are hard. But if you're constantly telling yourself, this is easy, this is easy, this is easy, and you're applying it every single day, it will become easy. It will become muscle memory. It will become something that you can do on a daily basis. I look at my charts and my assets every single day. And at first, it may have taken me hours. It may have taken me time to break down a stock. It may have taken me hours on days. Now it's muscle memory to where now I know simple little things that I'm looking for a company, for me to be able to see if a company's going to be successful or not. And execution. This is one of the most important things that is out of our control and is placed in your control. We can give you the information, we can give you the data, we can give you all the things that you need to become successful. But if you don't execute on what we teach, on what we provide, then you're just watching just to watch. Analysis paralysis is the nemesis of greatness. After learning, we want you to act on what you heard. Even if it's you starting off small, start that budget, open that account, buy that stock, look up the homes in your area. I want every single person within our group to be an active homeowner. I want every person within our group to be actively investing in their 401k. I want every single person who's hearing my voice to be able to learn personal finance, because if kids are in your future, if you plan on being around for your nieces and nephews, for your mother and your father, for those after you, if you're the link that can break that chain to financial poverty, then that responsibility falls on you. And if you're just listening and not passing the information on that we're giving, you're doing more harm than good. We want you to be present. We want you to be less present-minded. We want you to be more future-minded. Here's what that means. We want you to move away from the scarcity mindset of right now. Yes, if I make $200 today, it's easy for me to go cop a pair of J's. It's easy for me to go buy some new clothes, to go buy some new video games. But I'm feeding my flesh of right now. And later on may never exist if I'm continually thinking about being present-minded. We want to shift you from being present-minded to future-minded. Winners move towards the future and are rewarded for their efforts made in the present. We get it. It sucks. It sucks investing today. But tomorrow will thank you so much. And in a few, I'm going to show you all how I was able to grow my money, to grow my net worth within real estate, within stocks, within my finances, by just sacrificing, saying no of today, so my yes can benefit from what I was doing back then. Here's where we specialize as a company. We specialize in stocks, which includes equities, options, and basic and advanced trading concepts. Business mastermind. You have a business idea that you want to launch off the ground. We can help you from creation, management, and brainstorm ideas to help you get pushed in the right direction. Budgeting. Budgeting made simple and easy to understand. And real estate. From purchasing your first personal or investment home, we want to help you find equity in your deal so you can win the moment you buy. I really wanted to show you guys these two numbers. And I think whenever I say these things, I think it'll ring true and you'll understand why this is alarming. So the median amount for retirement saved for age range 35 through 44 is $60,000. $60,000. There are some who are listening to this chat who make well upwards to that amount. There are some who fall below that. But let's think about it on this end. Most people get their first job between 16 and 18, right? So if you add 17 years to your 18, that gets you to 35. So within that time frame, yes, I understand we have student loans. Yes, I understand we're young, we're dumb, we're blowing money on things. I'm the same exact way. But when you think about that, 17 years of earning money, only to be able to earn basically $3,500 in savings each year, that's a bit nuts when you really sit down and think about it. Now, look at the next number at 134,000. Now that's double the amount of 160,000. But that age range of 55 and 64, you're at the legal age to be able to retire and pull money from your account without tax penalties. How many of you can retire off 134,000? And if you go off the 4% rule, and what that means is if you withdraw 4% of your account in the beginning of the year, it's damn near impossible for you to go bankrupt. If you were to times that by 4%, what you'd be able to withdraw each year for you never to go broke would be $5,360. How many of y'all can live for a full year off of $5,360? I know I couldn't, especially since I have a wife and a daughter. I want to be able to help pay for her wedding. I want to help be able to pay for my future grandkids, pay for their future house. These are things that I want to do. And if I can only withdraw $5,360 per year without going broke, there's no way I'll be able to achieve those things. So seeing these numbers is extremely alarming and lets you know how poorly we're doing as a nation, as far as teaching our kids and teaching those around us the importance of saving. Now, I want to go ahead and show you this because this chart was also alarming to me as well. This is the changes in stock ownership since the 2008 financial crisis. If you look in 2001 to 2008, the percentage of individuals who held stocks or who held stocks was at 62%. And this was either individual stock in the stock market or in a self-directed 401k or IRA. So when you look at this and you throw in the 401ks, 62%, so a little more than half. That number drops from 2009, 2017 down to 54%. Now let's look at this breakdown real quick. This is an annual household. As you analyze this, look at how much it increases from the bottom to the top. So less than 30,000, less than 30% on both ends. Understandable, because that's below poverty. But even from 30 to 75,000, if you're looking at on the chart on the far right-hand side, 54%, a little more than half. Then from 75 to basically 100,000, 85 and 75%. Then 100,000, 88 to 89%. What that tells me is that the wealthy or even high-end middle class are investing in stocks. So once you know that cheat code, no matter where you're at in life, isn't that something you should be invested in? I would think so. Now, it also has the breakdown of age ranges. So from 18 to 29, we have 42% and 31%, big decline. Then from 30 to 49, 71 to 62. Then 50 to 60, 64, you have 69 to 62. Now, the reason why the 2008 was so important, because this is when We had our financial crisis when home ownership dropped because we had that the housing financial issues. We had the stock market going down. It was just a crazy time back in 2008. But to see these numbers decline is pretty alarming. And it's something that I want to be able to stop. I want to stop the decline, especially within our community, because the number gets even lower for Black and brown people. So that's the end of this. That's the end of this presentation. But I want to talk a little bit about myself, so that way you can understand where I'm coming from. Today is February 25th, 2022. This is my current chart as of right now. Now, mind you, let me see if I can pull it back up. If you look, I told you the median amount of retirement age range was 100, or I'm sorry, the median amount of retirement is saved for age ranges 35 to 44, 60,000. And then for age ranges 55 through 64 is 134,000. This isn't to brag, this isn't to boast. This isn't to say I'm better than you all, because it's not even close. I'm showing you this. I'm showing you this timeline because I want you to see that I started exactly where you guys are. Whether you're starting from nothing, whether you started with inheritance. I want to show you this, and even a little bit of background. I turned 32 in April. So I understand, especially being a first generation immigrant, right? Parents born in Africa, I was born here. Taking out tons and tons of debt, whether it came to the house, whether it came to student loans, right? Financial education, all they told me was go get a job, go to school, get you a good job, retire when you get old enough, right? That rat race that they continue to feed us. I wanted something different for myself. So just a little bit of heads up, I worked at a financial institution the minute I turned 21, 22. My eyes were blown. I'll give you a quick story. When I worked there was a guy, and I say this modestly, and his small account had $3 million. Now, it was all invested in Exxon at the time, which is, again, I don't advise anyone to invest all their money into one company. But this method worked out for him. So with $3 million, it was all invested in the Exxon. And what stocks do is that they pay off a dividend. With dividends, Exxon pays out every 3 months, so quarterly. So every 3 months, because he had $3 million invested in Exxon, they paid him $75,000. Now, mind you, for the year, after working overtime, making bonuses, clocking in overtime week after week after week, I believe I worked like 50 hours a week. My W-2 said I made $52,000. And this guy was living life off the money that he made for his career, which was $3 million, and collecting $75,000 every 3 months. So he was making a full year at $300,000 without even having to touch his $3 million. How many of you could live off of $300,000? I know I could. I definitely know I could. But that's the power of stocks and personal finances and understanding exactly what you need to do to get to where you need to get to. So here's why I bring this up, right? The market is currently open. It's 2:06, February 25th, 2022. This is a couple of days after Russia has invaded Ukraine. Without doing anything, waking up, getting our kids ready for school, taking them out, doing a couple things for work, the market's still open. This is how much money I've made. Now, of course, the numbers gonna keep fluctuating because the market is still open. But imagine making close to $6,000 in one day. That's way more than my monthly paycheck. Now, again, I went to school. I'm currently in finance. My monthly salary is around $5,000. No, I'm sorry. I take that back. Because I make 85,000 without bonuses, right? So I'll let y'all do that math. Here's where I started off though. March 2016. I want to show you guys this to illustrate the story of where I've come from to where my family's come from and why I'm pushing this so heavy, right? 2016, I'm 25 years old. I became a homeowner by 27, I'm sorry. So if you look at this timeline, you can see we started off with about $1,400. And this is me not taking my money serious, right? So you can see the gradual inclines and declines all within the account. Getting to $3,000, it's growing, it's growing, it's growing very slowly. Get to 10,000, 10,000, 10,000, 13,000. Then we hit 18, then 16, and then down to $30. Okay, well, what happened? Well, around this time, we bought our house. So all the money that we were putting up and investing and saving and making smart plays, we were able to use that as a down payment to buy our house. Okay, cool, right? And this is with me not really taking investing seriously. Now, if you look, we're at $30. We start making small investments here and there, and it's growing, it's doing what it needs to do, gradually increasing over time, still gradually increasing over time. But now we're in 2019. I just want you to watch this progression. Now, this point is pivotal right around here. Around January 10th, 2020, this is one of the biggest pivotal times of my life. Why? Because I got fired. First time ever fired. Damn, that sucks. It did suck, right? I'm at home. My wife is working. Now, I wasn't out for long. I ended up finding a job in March. But I want you to watch and look at, in a sense, the mentality of what I had, right? At 19,000, after I get fired, I end up growing my account to 35,000, from 19 to 35. So all within the time that I get fired, I make more money than I would have at my job. And it still doesn't click to take this serious until what happens? Corona happens around March 2020. And if you look, our account is still, it takes a dip, yes, but it's gradually growing over time, Now, this will be extremely important, and I'll show you why. So from that time, we go beginning of the year at 19,000. Now, and look where we go and look where we end at the end of 2020. So from 19,000 to 66,000. I'm gonna say that again. From 19,000 to 66,000. We tripled our account. We tripled our account in one of the worst financial times in the world, where people were getting laid off, people were losing jobs, people were taking pay cuts. We made some of the most money we've ever made. Now, the story doesn't stop there, because from 2021, we go from 68,000 and end the year at 194,000. Now, currently at 160 or close to 160, so it's a pretty steep decline. But what's going on? What are we doing? We're buying stocks. We're investing in options. We are changing the way that we live by changing our priorities. completely changing our priorities. I am a huge shoe fanatic. Huge. I took this time to just say, all right, I'm gonna relax and take this serious. So all during this time, all of the knowledge that I gained at TD Ameritrade, I'm applying. And this is the first time in life I'm just like, wait, I can make this a career. I can retire off of this. The answer is yes. And this is what I'm constantly trying to show others who look like me. Hey, if you change your mindset even just a little bit, you can replicate some of this. Now, mind you, we may think this is a big accomplishment, but there are others who do this on a normal basis. I'm in financial groups where traders are making at least $91,000 a month just trading and investing. Some of the dopest mentors that I've come across, from Ian Dunlap, from Mark Monroe, from others where I've been in rooms that have one-on-one conversations with them, as far as understanding their methods and understanding what it took for them to get to where they needed to get to. The same thing always rang true in every conversation I had. It was studying, it was learning, it was being knee deep in the research and understanding what I was buying, knowing what I was purchasing, what I was investing in. Every single day, I'm learning something every single day. So let me show y'all this. And this will end my report, or this will end the call with you guys. Let's look at this. This is a 3-year chart of Apple. And you can look and see today the stock is worth $164. It's up $1.50, right? Less than a pair of J's. Now, this may seem alarming to you or may seem like too much. Don't worry, the channel will break all of this down. But I want to show you a chart of Apple. The narrower you look, the more it may freak you out, right? So here's what I mean by that. Using a line chart, this is where Apple opened up today. So it opened around 163. And like I told you, it's around 164, right? If you have a narrow view on stocks, present term, present thinking, you will miss the blessing that comes with it. And here's why. If I'm near term, I might have made $1 today. Here's a 10-year chart or a 10-day chart. If you held this from 10 days prior, you would have lost money because it opened around 171. It's a 1-month chart. Open at 163. In a month, you would have made $1 if you just bought one share, right? Let's go 3 months now. Open at 159. Mind you, our view is getting wider and wider and wider, right? Here's a 1-year chart. Open at 122. Okay, let's look at a 5-year chart. Open at $34. Now, mind you, Apple's had plenty of splits, so I just want to throw that out there, right? Let's say we go back to a 1-year chart where it was 124. Let's do this. Let's say we take $10,000, small money, divided by 124. That would have got you 80 shares, okay? Take 10,000 divided by the price that opened at a year ago. It would have got you 80 shares. Times that by the price it's at today, 164.38, you would have made $3,256 doing nothing. If you bought the stock a year ago, bumped your head, woke up, forgot you had the account, opened your account, and had that amount of money, you would have had $3,000. Okay, cool. That's off of 1 year. What if we did this off of 5 years? Now, mind you, 5 years ago, Apple was worth $34, right? So let's take that same 10,000 divided by 34. You would have had 294 shares. Times that by the price it's at today. Same example, you would have $48,347 if you did nothing but buy $10,000 worth of Apple shares. 5 years from now, you would have this amount of money. Example doesn't stop because we want to think long-term investors, right? Cool. Let's do a 20-year chart just to prove my point. In 2003, I was 13 years old. The share after stock splits was 41 cents. So if we took $10,000 divided by 41 cents, you would have had 24,390 shares. Now, times that by the price it's at today. I'm gonna let that sit with you for a minute. $4 million off of 10 grand. $4 million off of 10 grand in 20 years. This is why I say investing long-term is the wave. It is the cheat code. And if you look at this chart, yes, there were bumps and bruises along the way, right? But everything rings true. Now, let's do a 3-year chart because I'm gonna go ahead and show you guys something before we log off. I told you the biggest global issue that we had in the past year for everyone was what? Corona, right? If you look, Apple was at a price of $78 before the drop in 2020. When we see drops like this, like what we're going through right now with Ukraine and Russia, I get excited. Not for the lives lost and things of that sort. Like I want to make sure I'm clear for that. But whenever the world gets fearful and sells out, real investors buy in. So if you look, we go from $81 to a low of $64. Had you bought at $64 and held it for the rest of that year, you would have doubled your money. You would have doubled your money. And guess what wealthy investors did? Exactly what I just told you. So this is just a sneak peek of what we will be offering, what we will be teaching. We do own a stock club. We do have financial teachings as well. We also have, and by the way, I'm not a financial advisor. I'm not advising you to do anything. Do your own research. Again, I'm not a financial advisor. But the choice of what you want to do is all on you. I'm not responsible for it. I'm just here to provide historical data. What we do offer are stock watch lists, top 20 stocks that you can invest in. We do offer stock clubs to where we can teach you how to trade, give you valuable insight and analysis on different types of stocks. We also offer personal financing, whether it's creating your own budget or needing a not a personal advisor, but having someone be accountable with your money, someone walking alongside of you. We also offer real estate tools, and we also offer a business mastermind. These are the things that are at your disposal for a reasonable price. The stock club is $75 a month. Just to be mindful of things that we've done for other people. Without even paying $1, I had one of my homies make $20,000 off of the things that I gave her. Another person, 50,000. For last year, 2021, we grossed just off of investments, 90,000. Now, again, I'm not saying you get those same results. What I am saying is that you should be investing. Thank you for listening to this presentation. I hope to hear from you guys. I hope to see you guys. And if there's anything that we can help with, please reach out to us.